Good morning, everyone. How you doing? All right. Oh, a little quiet here this morning. Not really a big deal. Things down a little bit. I think that's to be expected after last week. It wasn't like, some huge run to the upside or anything like that, but just the idea of taking out a prior high that usually is going to create a stall in momentum. Let me just get the thing here. Oh, it's a pretty simple concept, but it works. And the rule goes after a greater than 100% retracement, expect a stall in momentum. And while, they had this ex dividend and whatever else was going on there with rebalancing, the spiders were weak on Friday. And so now we'll see where they're going to go. Wait a second. Whenever I have the drawing tool, I have to switch back to something else. Otherwise, I can't move the mouse around to move to something else. So now spiders, they're not far from where they were, right? 291.42, 291.99, down about 50 cents, but into an area of support. So just, based on a very short-term analysis, looking at the 60-minute chart, that's a deep retracement, which is a move back down to the low of the bottoming tail bar. It's one red bar. And so, the ideal scenario, the most bullish is when we talk about wide range bars, but that bottoming tail bar is a wide range bar. It's not a huge one, but okay, relative to the prior one, it's definitely a big bar. And relative to these two, I'm just eyeballing it. It's larger than those. Maybe about the same size as this, if we want to look at that as an igniting one. But anyway, the point is, look at the range of these bars, and that bottoming tail bar is a relatively wide range bar compared to, just eyeballing prior bars. So ex-dividend effect aside, wide range bars, we look for prices to stay in the upper 50%, same thing, or the upper third. Obviously, that's not happening, and it's gapping down here. So a little bit of negativity, but the trend is up. So we wait to see if buyers are going to show up, based on this level of support and where we go from there. If we look at this move from the low to the high, it is reasonable to think that it should pull back and probably hold, let's just say, that breakout area there. And then we would see some consolidation type of chopping around. It would still be normal type of price action in alignment with a bullish view. A move under this low here, and while it's not, excuse me, what we would define as a pivot of at least three higher lows to the left and the right, you do have 4 to there and then 2 to here, and just looking at it, in a very plain way, trading below there would certainly make the chart look a bit negative, but just based on our rules, this is the major support area. And so a move down into here, while short-term negative, we wouldn't want to see it coming all the way back down to that point there, because then the weekly chart would start taking on a mildly negative view as well. So we're going to see how far this goes, what kind of consolidation we might get over the next day or two. And so as I think of different scenarios that would change the bias that I just explained, would be a green bar today, right? So what I do, I look at patterns and I say just what I'm saying. What scenarios could unfold here? And there's a lot of them, so I certainly couldn't pick up every possible thing that could happen. But let's see what would be something more neutral, just hanging here, something more bearish as explained, pulling down, and something more bullish would be a green bar. And then we'd have like, I guess that bull sandwich type of scenario, where you'd have a green bar and then that would suggest, hey, higher prices. So right now, what we have and where the open is would suggest a neutral to slightly bearish bias until proven otherwise to see if we can hold this area and get turned around. So that's what we are looking at from here. And just look at the S&Ps. And you get a different view because it's a 24-hour chart. So we've got this complete wide range bar here. And then Friday, you've just got that narrow bodied bar up at the top there. No big deal. And the futures here are down a little bit. They're in the upper 50%. It's just pulling back. How far are they going to go? I guess we're going to see in a little while here. So far, this where they've opened up and going sideways, they're gone nowhere. So we're neutral at this point. And then looking at it from the futures point of view, we're neutral to bullish because it hasn't retraced very far. On the other hand, we get the futures closing down here at the end of the day. It's going to be more bearish. It's not going to break the trend, but we're going to have a breakout failure at that point. Because then we had this little consolidation, which looks great. And this green reversal bar, that was the event, remember, on that day. And prices pushed higher. So if they push down below this breakout bar, that's short-term bearish. And then we'll see where it goes from there. Right now, we're objectively looking at possibilities pre-market. And at the end of the day today, or as we get closer to it, we'll have information to suggest confirmation of short-term negativity or things turn around and look good. And we'll be saying, hey, up several days in a row, let's go up more days in a row and see where it goes from there. Let's take a look at the Qs, right? Bit of a negative day there, right? An engulfing kind of day and going lower. And so we look for the next level for it to stop at that point, theoretically, and see what it does when it gets there. We're looking for reference points, significant reference points, and that's a significant reference point on a 60-minute chart. So as prices get down there, there will be buyers, and we'll see how many, what kind of bar forms, bottoming tail bar, 180 reversal, wide range bar, which is reversed. We'll see. Does it just slice right through it like it's not there? That would be more bearish information. So right now we're in a short-term corrective mode here. Overall, the Qs have been lagging because of weakness in some of the FANG stocks. So this week, we shall see how this unfolds, but just kind of looking at it a little bit longer term, 20 is rising, 50 is rising, even the 200 is rising. Those moving averages aren't very far from each other. They pretty much stay relatively close. So it's not the tightest trending move for sure, but it's trending up. So whatever we think on a bar by bar basis, meaning, oh, here's a red bar. Is that a reason to get bearish all of a sudden? No. And so is this red bar reason to start thinking, run? Why is she calling me? No. So we'll see what today brings. Is it a big, nasty red bar down to the lows here? Well, that'd be a bit of a concern. We have a confirmed little double top there and a deep retracement, but overall a trading range, and we kind of would then come to the conclusion of, hey, we're dealing with a mess here. But if it's a green bar, well, let's buy it and look for prices to go higher. All right. The NASDAQ futures pulling in a little bit more. You can see the same moving average uptrend, just kind of like what I call a self-correcting grinder, kind of a move up. And this should get turned around. Let's say let's say it's from here because that's the obvious reference point. But if this was to flip right back up at the open, and maybe we've got a breakdown failure. So when you learn bar by bar analysis and how we look at trends, you have so many possibilities that are open to you that could happen. And none of that says what's going to happen, but you shouldn't be, thrown off by anything, meaning you can be surprised that a certain pattern was able to reverse itself where it looks so convincing, or a convincing pattern that goes in the other way. And, that shouldn't have happened. But anything that can unfold when you understand trends and bar by bar and what you're dealing with, any surprise should result in you recognizing what's happening and saying, okay, this is what I should do, right? Go with the new direction, stand aside, wait to see what's going to happen, and so on. Dow made its new all-time high, right? As I was looking for that to happen several weeks ago, just based on overall what was happening in the markets, it's now pushed up and it's made the new all-time high. The transports are up there. The internals aren't there yet, which we talked about last week. So we shall see what happens here. Right now, we've got a little consolidation day going on pre-market. No big deal here. This clearly outperformed. Odds are it begins to underperform, and we'll see what happens here in the next few hours. And then by the end of the day, I'm kind of losing my voice, guys, from talking all weekend, recording the swing trading class. So my throat hurts a little bit. Not used to it anymore from when we used to do those all weekend. Bonds going down, broke through that low here. And is there anything to stop it? It already tried to hold here and failed. So it does have room down to 135-ish where there's this consolidation right there, unless it can, hold those bottoming tails and reverse back up again and form a little mini W formation down here. So we'll see. Right now, it looks like it's going lower. Crude oil breaking out of this range. Tested the 200, back up, downside shakeout. It's been messy. We talked about that. And we're looking for what we said last week, and was that this would stabilize here. And I'm not crazy for the pattern, to tell you the truth, because of this consolidation. Prices never traded above it. They just traded back down, but it certainly is a huge improvement. And you can see that maybe it's got a little bit of work to do here. If it can do that work, and crude oil suggests that it can, because that's supportive of these stocks, that it can get through here, and that's going to be the place to be. So question is, do we buy this here with a stop below these lows and anticipate this mess being taken care of over time? When I say over time, meaning we're going to sit in the mess for a while, because theoretically it's not going to go through it like it's not there. If it does, that would be a surprise, a good surprise. So if we buy it and it gets through it, I always say that that's great. Kind of like what XLF did last week, with it getting turned around, where finally the rise in interest rates were able to have the effect that it needed to, and it popped to the upside up through that resistance. And so a little bit of weakness after that. And as long as it can hold now, right, we just go through the process, the factory work is that, it can hold the top of this wide range bar. Everything looks great. So we'll see if buyers want to step up and buy financials. And that's one of the things that we'll keep an eye on here. today to see if financials can show some relative strength, and we'll know shortly. Let's just take a look what XRE is doing, because that looked terrible, but now it's been able to retrace a decent amount of that prior decline. So kind of a crazy price action, but we'll see if they can come back from that nasty drop. And XLB looks great. Internet kind of sitting on the edge of the cliff there to see whether that's going to break to the downside or not. And that is certainly not going to help the NASDAQ market if it does. And it's kind of like doing nothing here pre-market. And technology is kind of a grinder, still holding up, but down here a little bit. And I think that's about it for me. Dan will go over some stocks. There's a few that are moving around here a little bit, but overall, I would say this open is neutral to a little bit negative. Interestingly, that pot stock, and I tried to short it on that day, but no shares. I can't say I would have been still holding it, that's for sure, because it was doing some crazy moves. Anyway, it's finally came back down to earth. But if you had shorted it or ability to early, you would have been decimated only to see it go in the direction you originally thought. So,
yeah, Greg.
All right, guys, let's see where we're at with open positions, and we'll see what the day brings us. Oh, did you see Siri is buying Pandora? Pandora's gapping up here a bit, and that's interesting.
Yeah, Greg, on this Tillery, I read there's only like 10% of the float is available for trading.
And I guess Dan, or I got muted. I guess I'm muted.
Yeah, Greg, on this Tillery, I read there's only like 10% of the float is available for trading.
I guess yeah. That's why it moves like that. All right, got muted. I guess I'm muted. Nice.
Yeah, Greg, now we can hear your delayed Skype recording going on.
That's YouTube.
I mean. Yeah, so another interesting thing in that article in Barron's was they said like one guy owns the banana boat share of it, and he became a multi-billionaire, of course. But yeah, that was the problem with shorting it. But a second interesting thing they said was because of the light float available for public trading, that the daily volume has 100% turnover per day. Think about that. The available shares are all, so let's just say it's 50 million. Then 50 million shares are being bought and sold. It is incredible. Let's look at a couple opens here, and I'm not going to do them all. I'll just focus on ones of concern. So CMCSA, we're long stock, and we had a trailing open profit, and they're buying that Sky network, and the shareholders are saying they don't like that because you're paying too much, and that's gapping down on us. So we're just going to use our master trader gap rules and use a 30-minute low for that. Glancing over here. Moss put spread, a couple banks. MLM we entered on Friday as a call spread. S-Fly, we're short stock as a bearish 1, 2, 3. Sienna, covered call. KMB, we had a put spread that expired last week, but we also have an open covered call that expires this week. Square, we have a bear call spread. ADP, we had a put spread that expired worthless, but that still looks great as a directional on a pullback. Let's keep an eye on that. Dish, long stock. Cisco, long stock. We sold a third into the rally on Friday. Amazon, we have as a bear call spread today, and it looks like it's gapping under the trigger, so we'll have to use a 5-minute low. Then that's why I use, yeah, Greg, see, perfect. That's 100% what the guy was saying, the author. And so that's why I say when we do these, excuse me, when we do these spreads, I want a limit. A couple we're looking at today, Deere is gapping up in a weak market. That's good. Medtronic looks great. Spider, we have a put spread that expires Friday, and then we closed out of a bunch of the, well, we actually have a diamonds covered call that expires this Friday also. We closed out of a bunch of put spreads on Friday. Let's look at this big old list of mine. Just miscellaneous things. Here's Bitcoin. So spiders. Here we go again. I lost my pre-market data. Jesus, not this again. Junk, 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 junk. So look at these cannabis stocks here gapping down. I don't know what the news is. Yeah, I have a big watch list, both long and short. Here's one marijuana stock I want to keep an eye on over Thursday's high. So then, you know, it's kind of going to be, you know, a bull sandwich if it takes out the high. Weekly, monthly look fine, and that's in the marijuana sector. COP here, gapping up. Beautiful all time frames, relative strength, definitely to the sector. I mean, big time. Look at XOP, and so this thing's dwarfing it, but there's no entry right now. John, when you say plays come out, I'm not sure if you're talking about Telegram or the letters, but yeah, we sent our letters out, all 3 letters over the weekend, but I don't send Telegram alerts as we spoke about. Yeah, letters came out. Yeah, email admin and we'll see what's going on. XOM, 16 bucks. All right, here's an interesting one. It's a big gap. It's excessive. I would have preferred it gapping, you know, right here.